Have you ever wondered how you're able to get matched with that person on Tinder? Or have you ever wondered how you're able to get connected with that Uber driver meant to pick you up? Well, that's all powered through a little company called Elastic. In this video, we are going to be breaking down Elastic, ticker symbol ESTC, and explain how it powers the search that connects us. So as we know, businesses are shifting more and more towards technology solutions to power their business. Now, what Elastic is saying their customers want are powerful, fast, and relevant search experiences. They want something out of the box and an open API. They also want the ability to mold it into any way that they want, and they want complete visibility into the analytics, results, and user behavior to gain actionable insights. Now, what Elasticsearch is providing is not only a powerful search engine, but also a powerful analytics engine for making product recommendations and alerting on-order thresholds, powering their e-commerce business. Their second main product is observability, which is unified observability for the entire digital ecosystem. So they have anywhere from data logs to metrics and monitoring, APM or application performance management. And to put it simply, it's the art of managing performance, availability, and user experience of software applications. And lastly, uptime and synthetics. So having to manage a whole bunch of different systems and data is very complex. And what customers really want is a single, seamless platform to be able to get all their observability data. Not only do they want easy ingestion of the technology into their operations, but they want operational simplicity. And lastly, one of the most important things in a digital world is security. Prevent, detect, and protect any organization from attacks. So they have security information and event monitoring, analytics, endpoint security, threat hunting, and security ops and cloud monitoring. So with so much data being thrown around and ingested, stopping attacks at scale is pretty difficult. What customers really want is threat protection at scale across their whole entire system, network, and endpoints. We've increasingly seen machine learning and artificial intelligence be a pivotal factor in security detection. Customers really just want an automated system to protect them 24/7 that works on its own. One of their customers, which is a Fortune 100 retailer, says that with their Elastic-powered security platform, they save millions of dollars. So in 2020, they're continuing to improve on their product offering as they're focusing on proprietary feature development. They have an open source and basic plan that are free. However, we do see a gold, platinum, and enterprise premium service, which is paid. Their whole entire cloud offering is being charged as well. Over 90% of their downloads are default. So Elastic has a pretty straightforward pricing model as it's resource-based pricing where you pay for the data that you use. So this is really Elastic's bullish thesis where search drives value, technology means versatility, and pricing translates to transparency. Search is being increasingly more important in the enterprise area as it's critical to be able to connect different operators together. And with Elastic being a single stack technology, it makes it very easy for a company to integrate them and be able to have economies of scale across multiple projects, teams, and different use cases. They're seeing pretty rapid customer growth and increasing strategic commitments. As we can see, their total customers in 2019 were about 8,000, and as of 2020, it's hovering around 11,300. Now, they've seen almost a 50% increase with customers with AVC over 100,000, and AVC simply stands for annual contract value. Annual recurring revenue reveals how much recurring revenue you can expect based on yearly subscriptions, and AVC, on the other hand, is the value of subscription revenue from each contracted customer normalized throughout the whole entire year. One of the great things about Elastic is that it's being used in a wide array of different industries and a whole bunch of notable companies. So about 46% of the Fortune 500 customers use their product, and 31% of the Forbes 2000 use their product as well. I'm sure you notice most of these brands from Adobe, Cisco, Shopify, Etsy, And this is really just scratching the surface of all the different customers under their belt. So Elastic is seeing pretty robust growth in their Elastic Cloud as customers want to deploy the infrastructure and apps on-prem or in the cloud. So because there's a lot more workload in the cloud, Elastic's growth is also reflecting that as well. So Elastic has a pretty strong foundation for growth as their business model has very strong network effects. They have multiple expansion levers as there's more data sources and volume being transacted on their website and more solutions are being adopted. They're claiming to have technology differentiation as they have 3 solutions in a single stack, which makes it really easy for the user experience. Now they're seeing a really strong track record of revenue growth as they've been seeing pretty healthy revenue growth above 50% except for the last quarter of Q1 of 2021. One of the main reasons of this consistent growth is because they have a high recurring revenue model with robust SaaS growth. So about 92% of the revenue comes from their subscription revenue mix, which is currently growing at around 60% year on year. 70% of that is self-managed, and 22% of that is SaaS. Now, they aren't a profitable company, which isn't really too surprising for a fast-growing software company, but it's important to know that they aren't. Now, they are seeing their operating margin and free cash flow margin and trend towards profitability. Now, as we've seen before, they're seeing pretty rapid and diversified customer growth, and they're successfully executing on an expansion strategy. Now, one of the good things to see with Elastic is that they have a pretty high net expansion rate at about over 130%. So we can see that there isn't really too much churn with their products. Elastic is a pretty sticky business, and customers are continuing to use their product, and Elastic is currently upselling them. So as we saw earlier, their SaaS growth is pretty impressive at over 100%. Now, it only makes up about 22% of their revenue, but if it does continue to grow at these healthy growth rates, we can definitely see it contributing a lot more to its overall revenue mix, which in turn would continue to drive Elastic's revenue growth forward for many years to come. So the total revenue in 2019 was about $272 million. In 2020, it was about $428 million. And in fiscal year 2021, they're forecasting about $547 million. So they are seeing a slowing of their growth rate. However, it still is pretty impressive as it is over 40%. They're continuing to see expansion in gross profit as they continue to scale further. So their gross profit margins are going up ever slightly, and the gross profit is going up by over $100 million. Now they're forecasting in fiscal year 2021 to have negative 4% to 2% cash flow, but in 2022, they're actually forecasting it to be positive. Of course, I think it's really important to look at their management as well as their culture. Now, looking on Glassdoor, Elastic is currently rated at a 4.1 out of 5. Shay Bannon is their CEO, and from everything I've seen about him, from the financial highlights to him on YouTube, I do think he's a really competent CEO, and it looks like a lot of people approve of him at 92%. 82% recommend to a friend, and just looking across the board, it looks like it's a pretty well-run company. So Elastic is still relatively a small business, and they're expanding its top-line sales as rapidly as possible while trying to take care to run a sustainable business model. Now, the company needs to execute on their promises and continue to build momentum in the enterprise software market, which is a very competitive space. That being said, Elastic offers a pretty unique product in an explosive growth market, and the stock is actually not terribly expensive compared with other growth-oriented companies. I think all things considered, Elastic is a solid buy if you're willing to take on some market risk in return for explosive revenue growth. So as we've seen, search is a very powerful tool that a lot more enterprises are adopting and integrating in their operations in order to drive and gain a lot more insights. So as we've seen, there's many different use cases for an application like this. We've seen Tinder, we've seen Uber, and that's really just scratching the surface of what this software can do. So I really like the fact that Elastic is a single stack and that they have a unified foundation of solutions. So they have the enterprise search, they have observability, and they have security, which are all a single unified experience across all these different solutions. They have a large total addressable market at 78 billion forecasted for next year, and they have a wide array of notable customers that continue to use their service. They also have a strong community around them. As being an open source platform, anyone is able to utilize their software. They're seeing pretty strong revenue and customer growth, and they're seeing increasing strategic commitments as well. I think Elastic is a pretty strong business as their product is in demand. Their valuation is pretty high, but it is pretty consistent with a lot of these other software solutions. The important thing that I want to look at is the product and to really understand if it's going to continue to be demand in the long term. So one of the most important things for me to understand when investing in a tech company is really understanding the product and understanding if it has a long-term growth future. And it does seem that Elastic does have a strong net expansion rate at over 130%. And it's also seeing pretty robust revenue growth, which is really good to see. Now, what am I doing? Well, I think Elastic has been on a great run this whole entire year, and I would love to see it pull back 10 to 15% before I initiate a position. So as of December 21st, Elastic is currently standing at $155. So me personally, I would love to see this pull back a little bit, a healthy 10 to 15% pullback, and try to get this stock around the $130 and $140 mark. Now, the idea behind one of these videos actually came from one of you guys. Now, Slim Jimmy gave this recommendation to check out Elastic and Magnite, which both have been on an amazing run this whole entire year. I'm always interested in looking into new stocks, so if you guys want me to look into one that you're looking at right now, just go ahead and leave that in the comment section down below, and I'll try to get back to you. Well, thanks guys for sticking around. That was my breakdown of Elastic. Now, let me know what you guys think and what you guys are going to do in the comment section down below. And if you guys want more content like this, go ahead and hit that big red subscribe button so you guys can get more content directly in your inbox. Thanks guys, and I'll see you in the next video.